is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hi, everyone, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with co-host Andrew Young. Every week for the past few months, we have tackled a new subject in the DeFi space. And this week, we are going to be doing a really interesting topic that is near and dear to my heart, which are DeFi Index funds. So many of the largest asset managers in the traditional financial world are passive ETFs and index funds. The decentralized financial ecosystem turns out is no different. Smart contract-based index funds have been one of the fastest growing areas within the DeFi ecosystem, really since the outset. And like traditional ETFs, they create value for investors by packaging up multiple different crypto assets into a basket or index, enabling investors in essence to get passive exposure to an entire sector with one click of a button. Now, they come with a twist. These index funds are entirely blockchain-based. So rather than having a centralized asset manager in charge, there is simply an open source software protocol and a decentralized governance system for making the decisions. So on this episode of DeFi Decoded, Andrew and I are going to dig into this rapidly emerging space, DeFi index funds, and the movement that surrounds them, and discuss, I guess, in comparing and contrasting how they look really relative to traditional ETFs and other kinds of investment products. And obviously to explore whether or not these kinds of products in the DeFi space could be applicable in more traditional settings as well. So Andrew, welcome. Let's get right into it. So let's start maybe just by quantifying this. What is the AUM or TVL here, total value locked, a metric we've used before on the podcast, of these different kinds of index funds?
Yeah, well, thanks for having me as always. The DeFi index funds have really they've always been there from the start of the DeFi ecosystem, but they've really emerged over the last 6 months. And they've actually grown dramatically to over around $500-600 million of TVL now in terms of AUM, which kind of in the grand scheme of DeFi is still quite small, still hovering around kind of a 1% ratio. But with that being said, they're sort of, like I said, growing quite fast. And the biggest one within this space is Index Co-op. So Index Co-op was actually it's a DAO. So what that means is a decentralized autonomous organization. And it was started by one of the sort of leading, call it DeFi asset managers within the space, called Set Protocol. And essentially what Set Protocol did is they teamed up with a number of different sort of, I guess you call them luminaries within the DeFi space. The big one being DeFi Pulse, which is kind of the main tracking site. I guess you can think of it as kind of the S&P tracking index of DeFi.
So DeFi Pulse is like an index provider, basically?
No, so DeFi Pulse it's kind of like CoinMarketCap. So what I mean by that is that it has a list of all the different DeFi projects and all their TVLs of all the different kind of Ethereum-based DeFi projects. So it's sort of like the go-to source of information when you're looking up a DeFi project and the DeFi project's token, kind of showing all the fundamentals, the token price, their TVL, all that type of stuff.
Okay.
And so Set Protocol partnered. So Set Protocol had built this kind of suite of smart contracts that allow. At that point, they had created this thing called token sets, which is essentially allowed anyone to use their smart contracts to build their own index fund, which is pretty unique. And they partnered with DeFi Pulse to create, I believe it's called the DeFi Pulse Index, which was kind of the first large-scale decentralized ETF, as you want to call it. And Index Co-op has around $400 million in TVL.
Okay.
And their vision is to become this decentralized BlackRock. So what I mean by that is they're trying to become essentially this autonomous asset manager, and that allows anyone to kind of create their own passive ETF products, blockchain products.
Fascinating. And so who's buying these kinds of things today? Is it all mostly is it crypto native? Is this stuff you can only really access through the traditional DeFi ecosystem, or has this started to transfer to the mainstream at all?
No, I would say it's very much within the crypto native or DeFi native sphere right now.
Right.
For example, I don't believe there's any centralized exchanges, even in the crypto space, that are carry these types of products as of yet. So if you want to buy these products, you need to have your own MetaMask, your own non-custodial wallet, and then you can buy straight from the protocol these assets. And they work exactly like sort of a traditional ETF provider. You can sort of subscribe and redeem from the smart contracts. And then on top of that, the ETF token also trades. And so it can actually trade at a discount or a premium to its NAV. Again, similar to sort of an ETF, a traditional ETF. And I mean, to be honest with you, like, it's a pretty unique product. It's quite different from, like I said, a traditional ETF. Maybe you want to talk a little bit about, because you actually have a ton of experience in actually launching the world's largest Bitcoin fund, which I don't actually know if is that classified as an ETF or not.
Well, at the time we launched it, it was the largest IPO of its kind in Canadian history. I don't think we're the largest Bitcoin fund in the world, but 9 does run a Bitcoin ETF, a carbon neutral Bitcoin ETF, I might add, as some investors are concerned about Bitcoin's carbon footprint, even though it's material. We think it's on the decline. But anyway, I digress. Yeah, there's some things that you mentioned that are certainly similar to ETF space. For example, daily redemptions. So in the ETF space, you can create and redeem units every single day. That's not true of all investment funds, but what it means in essence is that the sort of net asset value, or the amount of assets that the ETF owns, is constantly in flux. And it also means that you don't need to get exposure to the asset class by buying the units directly. It means you can subscribe to a new creation. Now, I wonder if there's a similarity in the DeFi index fund space as well. I'm guessing that if I'm an investor, right? So let's say that there's $400 million today in that one that you mentioned, and I'm an investor with $100 million that I want to subscribe to, or not subscribe, but participate in this strategy. It's not like I need to buy $100 million off of someone else who owns the token, right? Like, am I able to, or do they create new ones when demand increases? Yeah. That's a question that I'd like to understand a bit better.
Yeah, it's definitely a complex question, but yeah, it's exactly. So that's how the TVL sort of these assets increase over time, is that you can, similar to a traditional ETF, you can sort of subscribe to them. And that increases sort of the AUM and assets under management AUM of these protocols. But then there's also a secondary market for sort of smaller users that just want to, smaller investors that just want to buy kind of a little bit of it from a DEX. They are, what's interesting about these products, at least to me, is that they're actually quite similar to their traditional kind of financial system counterpart. Whereas something like a yield aggregator doesn't even really exist in the real world. So that's why I've always kind of, this kind of space has always called to me, in the sense that it's something that I can quite easily see that exists in the traditional financial system, and therefore will likely exist in this kind of decentralized financial system. And what's interesting though, is that these indexes kind of cover investable areas that you can't get exposure to any other way. So what I mean by that is, one of the most popular indexes on Index Co-op is this thing called the Metaverse Index, which is a basket of different crypto projects that play within this metaverse industry that we were kind of mentioning earlier. And I think that's kind of an interesting way, because for someone like me that's very interested in the metaverse, but doesn't really know which specific project actually makes sense to invest in, I can just buy this index and get broad kind of passive exposure to the whole sector.
Yeah, well, it's exactly what people do in the traditional financial world as well, right? Like an investor may decide, I need to have emerging market exposure. I don't know which country, let alone which company in, some far-flung country, but I know that I have a view on emerging markets. I think there's going to be whatever commodity, price increases, and that's going to help them or whatever. And so that is a reason to get exposure. And I think it's interesting that you point this out. I think a lot of people from the outside looking in assume that crypto is pretty similar across the board. And of course, I think what we've done on this podcast is describe how, in fact, it's completely different. Within crypto, there's many different kinds of projects doing very different kinds of things. And there are investors who are incredibly focused on, in your case, DeFi, and in my case, Bitcoin and DeFi. And I certainly wouldn't know where to begin putting together a metaverse portfolio. But I do know that it's an area that I think is really interesting. I know there are a lot of smart people working in it. I think a lot of value will be created there. And so I want to get exposure so I can buy a token to do so, just like I could buy shares in an ETF. So the question, of course, is, how do we get from, I think, what did you say, $700 million or a billion or whatever it was, to 10 billion in terms of that would still be crypto native, right? So do you see a path in the near term here where this becomes something that becomes widely adopted within the crypto native community? And then the next stage would be, at what point do you think this crosses over into the mainstream, if at all? It'd be sort of interesting to figure out a way to offer exposure to that index through a traditional vehicle, though I expect it would be very difficult in practice for so many reasons, which I won't get into. But what's your view on that?
Yeah, it's a good question. I think long term, honestly, these sort of blockchain based index funds are going to live in their own sort of ecosystem. And what I mean by that is the target market will likely always be sort of these DeFi native users. Ideally, though, sort of as the underlying DeFi native user base grows, these index funds can grow with that, and then also grow as relatively faster, just because of kind of awareness. Right now, there's pretty poor awareness on a lot of these sort of index products.
Yeah.
And there's also very limited selection. There's, like, for example, Index Co-op only has about 5 different main index funds, whereas something like BlackRock has hundreds or thousands. And so I think those are within sort of the DeFi native space. I think they will continue to kind of to grow relatively faster. They're also sort of juicing that growth more and more with liquidity mining. So as we kind of explained in an earlier episode, liquidity mining is where DeFi protocols give tokens in their underlying protocol to users of their platform. And so Index Co-op, for example, is doing a liquidity mining program where users that kind of interact with their products, provide TVL, provide liquidity, earn Index Co-op tokens, which are like a liquid governance token that captures all the fees from the management of these different index funds.
So it's basically like owning a piece of the management company, or the GP or what have you, in an asset management terminology.
Exactly.
Which is interesting. And this is all decentralized smart contracts. So is there a management team? I know there's no manager picking the tokens, but who's building all this stuff in the background?
Yeah, so what's really interesting is that, like I kind of said at the start, it's a DAO, so decentralized autonomous organization.
Right.
So what I mean by that is the underlying Index Co-op token actually has voting rights over sort of this index treasury. So all the fees go to this treasury, which is controlled by, and also a large percentage of the Index Co-op tokens themselves go to this treasury, which is, and on top of that, the governance parameters of these different funds are also controlled by this index token. So the index token, you can kind of think of it as like a piece. If Index Co-op is a decentralized BlackRock, then Index Co-op token is sort of a piece of that BlackRock. like you said, the GP. This is obviously way different than, and this is again kind of goes back to my previous point about why I don't think it'll cross over into the traditional financial world, is there's lots of regulations with kind of traditional ETF products, which I'm sure you're aware of as part of 9 Point Asset Group. And so I think it's unlikely that mainstream institutional investors will sort of buy these index tokens directly. But there may be sort of these crossover products. So like maybe in the future, there's like a 9 Point DeFi fund, which trades on a traditional stock market, which holds as its underlying either the index token itself or actually just the underlying sort of collateral types of the index token. And that's a way to give kind of traditional mainstream investors exposure to the DeFi space in a format that they actually kind of understand.
Yeah. So you mentioned this topic, which I think we're going to have to spend a whole episode on eventually, which are DAOs. So I'm not sure if you spelled it out, but DAO is decentralized autonomous organization. So, in traditionally in financial services and corporations in general, we use the corporation as the artifice to organize capability inside of an economy, right? So a corporation has a management team, a board of directors, it has shareholders, those shareholders have specific rights, it has subsidiaries, divisions, and so forth. And that is the sort of dominant way in which we have built value in the world, is through corporations. DAOs are something radically different. They're self-organized entities that don't necessarily or almost never have, a home office or a place of origin or a management team or board of directors in the traditional sense. They are decentralized organizations governed by users and owners of the token. So in certain respects, it is similar to a company, and in other respects, it's quite radically different. In Blockchain Revolution, and in subsequent work that I've done, we've actually examined how DAOs as a way to organize capability could ultimately replace the corporation. And could be the dominant way that we organize capability in the 21st century, because it's something that is digitally native, which is what more and more economic activity is becoming. It is decentralized, which is, I think, where our economy is going. And it's also removes the potential moral hazard that occurs when managers don't always act in the interest of shareholders. So there's a quandary in economics called the moral hazard problem, which arises from a misalignment of incentives like the one I just described. And presumably in a DAO, you've got token holders of the DAO who, because it is their own economic interests at play, are aligned, and so will act in the best interest of the collective, essentially, similar to like an owner run company, but on a massive global scale. So this is something that I think is obviously very early stage. I think a lot of people in the crypto and DeFi space are anticipating that DAOs are the new thing. We had DeFi NFTs, and now DAOs sort of as a superstructure to help organize all this kind of stuff. And I think that's something that we should be looking out for. Do you agree? Are DAOs the next, big thing in crypto?
Yeah, I think so as well. I mean, again, this is something that we could spend an entire episode on, just like you said, but yeah. I think there's one huge problem that's still sort of plaguing DAOs, is kind of voter apathy. And then also just kind of like having having things actually kind of move fast. So what I mean by that is, with a centralized infrastructure or legal entity like a corporation, the managers kind of have the ability to push through decisions really quickly. Whereas with a DAO, because you're sort of incorporating a number of different decentralized pseudo-anonymous participants in the decision-making itself, it can get quite slow to actually get things sort of passed, funding decisions, things like that.
Well, it's interesting that you say that because, I say DAOs are the new thing, but actually the DAO, the original DAO, is something that came into existence in 2016, I think,
Yeah.
5 years ago. And for various reasons, that DAO did not succeed. But one of the issues is the one that you raised, which is that, there's a reason why we have management. There's a reason why in the industrial age corporation, we have this thing called a management team to push through decisions, because to put any decision to a shareholder vote with proxies and mailing and informing them and so forth would be prohibitively expensive, slow, burdensome way of doing things, right? And also not shareholders don't always know what's best for the company. That's why management teams, that's why the board of directors appoints a CEO in the first place to oversee operations. But I think the argument for DAOs is to address the problem that you're raising, which is, well, if it's as easy as pushing a vote on with a token, then shouldn't it be very simple and almost trivial to do? And can't we have way more decisions put to token holders now than we could have had shareholders making decisions in the past? But you're saying, well, actually, no, there are some friction points there.
Exactly. Yeah, it's honestly an unsolved problem at this point. And sort of balancing speed with good governance is a decision that a lot of teams are sort of grappling with, especially because these DAOs are now in control of literally $100 million treasuries. Because like for most of these DeFi projects, typically what they do, and index co-op is the same, they will give kind of 50 to 70% of their native token to these DAOs or the community funds to let token holders sort of decide what to do with the emissions. I believe Index Co-op gave 70% of their total tokens to their DAO. And so you have these kind of platforms sitting on these massive war chests, especially with the kind of the crypto boom, but then sort of having trouble deploying it in a way that's kind of true to their philosophy. So I think it's definitely an interesting, very interesting kind of conundrum. And I think it's honestly something that we should probably spend an episode kind of diving deep into.
I think we accidentally just did, to be honest. We might have to call this one Index Funds and DAO Sneak Peek. And we should do a DAO episode. Let's actually do that. Let's make the next one a DAO episode. I think that's a great topic. And then we do have to finally bring on guests. I think we promised people guests. I don't know if they're getting tired of us. By the way, I got a haircut today. I see that you're still keeping the flow alive. There was a bear market in crypto this morning if you use the traditional definition of a 20% correction. So I don't know if that's the bull market hair is over or not, but I think you should keep it going for the contrast.
So I think, the day is still young. We still got a couple hours. Maybe the market will recover the 20% correction. Like you said, it's only started about 3 hours ago and it's down 20%, and still got a couple hours till the day's over. And I could honestly see
still a few more hours to go.
It'll either be flat on the day or down 40. We don't really know yet, but
yeah, exactly. All right, Andrew, great chat as always. And yeah, that's our episode on DeFi Index funds. Super interesting space. Obviously one that I'm keeping an eye on as someone who works for a more traditional asset manager, but who's trying to explore some of these innovative opportunities in the space. So this is clearly one of them. And DAOs, I think, are a very big topic, maybe the biggest topic in crypto that I think deserves a real discussion, maybe a little bit better research too. I'm going to have to do some reading this week, and we will get into it next week on DeFi Decoded. But that was it for this week. Thanks everyone for joining, and we will see you next time. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.